Welcome back to the Genius Maltby channel, a global community of news, discussion, comments, and conversations regarding precious metals and the global economy. Big welcome to the several comments I saw this morning from all over different parts of the world. I saw there were viewers now here from Saudi Arabia, Pakistan, and other corners of the globe. I guess globes don't really have corners though, so anyways, other parts of the oblate spheroid we call Earth. Let's look at some headlines. Not a whole lot of big stuff going on today, but some definitely interesting articles and conversation pieces regarding the topics we like to cover. Quick glance at the markets. Of course, these are going to change before the close, but looks like the Dow, the S&P down a little bit. Metals, again, having an incredible strong day, or a healthy day. And you see, double-digit moves in gold. You've got silver up over 1.39%. It's getting real close to the 18 mark now, 1753. We got 1266 on gold. A couple of charts here showing those jumps. These are from Kitco. 24-hour gold up $19 there. It was at 1264 on that one, and 1750 here on silver, up 29 cents. We're seeing things here. This came out from Lori Williams this morning. SGE benchmark takes gold price higher overnight. So as we discussed when the SGE news first broke, again, that's the Shanghai Gold Exchange, there was going to be a price differential between the SGE and then the London and New York fixes on gold, basically the East versus the West here. So real quick, he says there will be arguments as to which came first, the overnight rise in gold price on global after-hours markets or the Shanghai Gold Exchange, SGE, PM fix. But the latest SGE figure of CNY, 261.88, was at the higher end of trading, being equivalent to around US $1,258. At the current CNY/US dollar exchange rate, whether the SGE Gold Fix is leading or following, the general price trend is thus open to question, but perhaps the principal driver of the overnight rise in the gold price will have been the fall in the US dollar, with the Japanese central bank keeping its monetary policy steady at its latest meeting. The Japanese yen thus rose around 2% against the US dollar, which has a significant impact on the US dollar index, which fell around 0.2%. Needless to say, the move above the $1,250 level, which had been strongly resisted on the US and London spot markets yesterday, was breached in the overnight trade. That's really the biggest line out of the whole article, a key piece that I got. Resisted by the London spot markets and the US. It's just always interesting that the US markets and the Western markets are always trying to, it appears, to suppress the value of gold. But when it's allowed to trade a little bit more freely, as I believe it is in the Asian markets, because there's more demand and less interests of theirs to suppress the value in gold, it seems like it quite easily breaches resistance levels that the West considers to exist. So it just blew past 1250 in overnight trade. The price differential between the AM and PM fixes in Shanghai was around 0.7%. The big question is, can gold retain these kinds of levels or even move higher? At the time of writing, the spot price is sitting at a little over the 1257 level. So I think because of the SGE, and as we've discussed on here, when the news started breaking and the story really began to develop, I believe that new reality, because it's a new reality, kind of a new world for gold and precious metals trading, having this major titan as part of the process, the SGE. I think it's going to really drive gold higher from this point forward. It's my opinion anyway. Some other reasons why they're saying that gold and silver are moving the way they are today. Gold, silver gain as Bank of Japan and Fed inaction pressures dollar. So as we saw, the Fed was going to remain where they were, steadfast, not moving rates at all, because they said the economy slowed. We already discussed that story. And then also the Bank of Japan maintaining what they are doing, and that is negative interest rate policies, which will continue to fuel demand for precious metals because, again, holding paper will cost you money. or having money in the bank costs you money. So people are going where? Gold. As we discussed just in a couple of videos ago, citizens of Japan had made a tremendous move into gold because of bank policies in their country. Now gold's at more than 2-week high, with silver holding at the highest since May. We got gold futures climbing to more than a 2-week high on Thursday as a pair of central banks fueled a downdraft in the dollar. However, silver prices held their ground at their highest level in nearly a year. Neither the U.S. Federal Reserve nor the Bank of Japan altered their current monetary policies, as we just mentioned. Bank of Japan inaction was particularly shocking to global markets, as many had expected Japanese policy-setting members to enact a fresh round of stimulus to weaken the yen and combat low inflation. Silver price again jumped to near 1-year high. I'm sure these headlines are really tickling the ribs of the silver investors out there. There's a lot of people that hold a lot of silver. And gold revaluation could transform your financial status overnight. This is a hypothetical. This is not a reality. It has not happened yet, although this is an article that's covering the story. If it could, the effects of a revaluation of gold. And this is going to take some statements from our dear friend Jim Rickards, who covers this material and this issue quite a bit. But as we've discussed in the past, if there ever was a revaluation to kind of balance out this global debt and all the things that are happening in the global economy, it would happen quickly. It might happen, again, like I always say, overnight while you're sleeping. You'll wake up and it will have already occurred, and it will be too late for you, the individual, to make a move to secure yourself and your financial future. Key points they bring up here in the beginning of the article is, as we move through 2016, the horsemen of the geopolitical, economic, and social apocalypse are on the march. China has burned through its currency reserves as billions in yuan flee the mainland for safe harbor. Japan printing mountains of yen debt in an effort to create inflation, and not to mention negative interest rates, and thereby the conscious devaluation of its citizens' purchasing power. Saudi Arabia's gamble of cutting oil prices to the bone in an effort to break the back of the shell oil industry is becoming so costly that it may have to sell a portion of mighty Aramco to outside investors while keeping secret the amount of its U.S. debt. The U.S. government holds an incomprehensible $19 trillion in debt in a presidential election year where the programs offered by frontrunners of both parties would increase that amount by trillions more. So not a whole lot of hope and change in that article. They do want the change in your pocket, however. That's the only change the government really talks about, is they would like to get all of your change, all of your pocket change, donate it to the government near you. Topping it all off, banks around the world talking about negative interest rate policies, including the U.S. And, as we've discussed, this is where they charge you, the customer, for the privilege of holding a cash balance. Again, all that's going to do is cause people to move into precious metals. If you look at central banks' net purchase of gold, they're continuing to increase their purchases and holdings in gold dating back to about 2009. They've been adding. There was a period there where they were dumping gold, selling gold, but they're really becoming bigger and bigger and bigger purchasers of gold. And some people believe there's reasons for that. Now, since 2010, central banks being net buyers of gold, as world governments come face to face with the prospect of currency collapse, something's going to give. Confidence in fiat money is literally all that holds things together. Kind of a theme, if you've paid attention here on the channel, the whole idea that the confidence, this faith, this false idea that fiat currency has any value whatsoever. I tend to operate under that premise that fiat currency will ultimately always return to its intrinsic value, zero. And that eventually will occur. Should several governments or the world economic leaders come to the conclusion that they need to again incorporate gold into the economic model, it would need to be revalued. And if that happened, the value of gold would go up dramatically, but the supply of gold would immediately be consumed as a reaction to that. Gold, again, here's a quote from the article, just read it. Gold will be in such short supply that only the central banks, giant hedge funds, and billionaires will be able to get their hands on any. The mint and your local dealer will be sold out. That physical scarcity will make the price super spike, even more extreme than in 1980. The time to buy gold is now, before the price spikes and before supplies drop. As I said recently, the time to buy gold was yesterday, as a matter of fact. You don't want to be caught late in the game because, as we've said, it's kind of like musical chairs. When the music stops and everyone sits down, you don't want to be the only one standing there without a chair, because then you lost. Now, this doesn't mean you go out and rack up a bunch of debt, swipe credit cards, get a refi in your house, and go into debt so that you can accumulate metals, because we don't know exactly what or when this is going to happen. The biggest thing is get out of debt, start stacking some metals, do what you can within your means and what you can afford. With what could be coming, it would not be a bad idea to allocate a portion of your wealth and assets to some good physical holdings in metal. Gold and silver prices to continue higher through 2016. This comes from Blanchard. Blanchard and Company CEO David Beam says tepid GDP is a sign of more highs for precious metals. So it's the overall weather pattern of the global economy keeps causing headlines like this to come out. They say a smart man learns from his mistakes and a wise man learns from the mistakes of others. So it's time for us here on the Junior Smallpy channel to get wise and learn from the mistakes of others. Others being, let's learn from Venezuela here. Venezuela doesn't have enough money to pay for its money. As you know, there's some economic turbulence taking place down there in South America. Venezuela is basically going broke, trying to inflate their way out of it. Billions of new bills are in circulation. Still more are needed. Rampant inflation means gym bags full of cash for dinner. Does that conjure up some images? Has this happened in past history in other countries? Yes, yes, yes. This is what happens, and this is what you don't want to experience ill-prepared. Venezuela's epic shortages are nothing new at this point. No diapers or car parts or aspirin. It's all been well documented. But now the country is at risk of running out of money itself, in a tale that highlights the chaos of unbridled inflation. Venezuela is scrambling to print new bills fast enough to keep up with the torrid pace of price increases. Most of the cash, like nearly everything else in the oil exporting country, is imported. And with hard currency reserves sinking to critically low levels, the central bank is doling out payments so slowly to foreign providers that they are foregoing further business. Venezuela, in other words, is now so broke that it may not have enough money to pay for its money. You can see here, bills, bills, bills. Venezuela's rampant inflation is driving huge increase in bills in circulation. Millions of new bills. That's 4.5 trillion new bills. It's a very bad sign to see people running around with wheelbarrows full of money to buy a hot dog. Even the cash economy starts breaking down. You could almost say that's coming soon to an economy near you. But we would all hope not. For those of you that are younger and possibly in the millennial category of demographic, this article is definitely something you should pay attention to. End of the golden era for investors spells trouble for millennials. McKinsey study sees much lower returns in the future. 30-year-olds may need to save almost twice as much to make do. And those are probably the individuals who are saving the least because they, YOLO. You only live once. They live in the now. They don't plan for the future. I doubt that many of these young people think about a time in which they're retired or think about a future beyond 35 or 40 years old. Turning 30 just got a lot scarier. A coming collapse in investment returns means that people that age today will have to work 7 years longer or save almost twice as much to end up with the same nest egg as those of roughly a generation ago. Here's some charts that paint that picture, lowering your sights. After an era of stellar performance, investment returns in the United States and Western Europe could come back down to earth over the next 20 years. Past 30 years saw returns that exceeded the long-run average. The next 20 years could be more challenging. You can kind of see that there. U.S. equities, European equities, U.S. bonds, European bonds, all of them yielding less than previous 30 years. So that is definitely something for the younger crowd to pay attention to kind of try to digest that information. Now, you notice they didn't put gold or precious metals up there. There's not really a category for either of those, silver, gold, and now if I were to put those up there, I would estimate, I would predict possibly, that the next 20 years we will see gold and silver perform better, pay attention here, millennials, better than they've performed in the last 30 years. So that's one little chart we could throw in here, but they didn't, of course. But precious metals, due to inflation, negative interest rate policies, and economic problems worldwide, precious metals will most likely, in my opinion, perform better in the future than in the past. That's definitely an option for millennials. Maybe that's where the millennials will end up going. Maybe where they will end up investing. Maybe they're the generation that will finally wake up and realize, hey, all this paper fiat and these casinos in Wall Street are a bunch of garbage. They're wealth-stealing, blood-sucking vampires, and we don't need them. And then they'll start to do things on their own, maybe scale down and do more localized banking instead of these big, large, global or nationwide banks. And there'll be more focus on precious metals and frugal living, things like that. We'll see. We'll see what happens. Won't know until we get there. The economic and business drivers of equity and fixed income returns are shifting. Inflation has been tamed, it's saying. However, it's not over till the fat lady sings, and I think inflation will eventually rear its ugly head once again. One of the statements from the article is, the next 2 decades won't be nearly as lucrative, even on the optimistic assumption that the world economy snaps out of its recent funk and resumes growing at a faster clip, according to McKinsey Global Institute report titled Diminishing Returns, Why Investors May Need to Lower Their Expectations. So there you have it. Metals up, markets down, Venezuela's in trouble, and the future most likely will not be as lucrative as the past for investors in the casinos of Wall Street. It just furthers the case for our position and the idea that precious metals are obviously a safe and sound place to put your hard-earned labor, to stow away and lock up your wealth for the future. So if you are a millennial, if you're under the age of 30 and you're watching this video, go ahead and do us a favor. Pop a comment down below. Tell us what your plan is as a millennial. What do you plan on looking at 40, 45, 50 years old, 60? Thank you to all of you who stopped by the channel today for another news update. Thanks for being part of the Junior Small P channel, what we're considering here a think tank, if you will, a global think tank with over 8,000 contributing members. Thanks to all of you who helped the population of the channel grow by liking, sharing, and subscribing. And a tremendous humble thank you to every single one of you who has helped support the channel along the way. I see who you are. I appreciate it. And thank you from the bottom of my heart. So, have a great day. Take care.